Yes, well, it's positive inflation again. We had longer periods in Switzerland in which that wasn't the case. So in that sense, it's clear that we've now reached a situation in which inflation is on the positive side and nearing what one can consider to be the target of the S&B.
Which is 2%, right?
Well, it's somewhere between 0 and 2. So it's not quite clear here in Switzerland what the target is, for the Swiss National Bank at least. For the ECB, it's different. There, everyone knows it's close to, but below 2%.
Oh, okay. All right. So it's not as clear here.
Here it's less clear, I would say. I think on average we had an inflation rate over the last decade more or less of 1%. And so many people probably have the 1% mark in the back of their minds.
And is this then a good sign for the Swiss economy?
Well, it shows indeed the Swiss economy is doing well. We're catching up, so to speak. The European economy is going even swifter than we are, but Switzerland is catching up, and also the inflation dynamics show the same picture.
When you say that the European economy is moving at a faster pace or growing at a faster pace, is this
they're
what you
growing
mean?
at a slightly faster pace, at least at the moment still. And of course, the sentiment is a different one. The entire climate in Europe is really one of a booming economy, whereas in Switzerland, we're doing very well, but, well, it's close to booming, so to speak, but not yet completely booming.
What would take us to booming?
Well, it's partly sentiment. It's the investment activities. It's the sentiment overall. It is already very broadly based. It's not only the export industry, for instance, which is doing well, but also the domestic economy is still performing well. Okay. So overall, the Swiss economy is really performing very well.
Okay. And so, and this inflation and even the price index rise we've seen is all points us in a good direction.
Yes, indeed. The 0.8% is, I would say, close to what is more or less normal in Switzerland, which is already quite a relief.
And in terms of inflation, then, is this also good for wages, for example?
Well, we had a couple of years in which wages were nominally not growing very fast, but at the same time, because of the very low inflation rate, they were in real terms, so to speak, rising quite substantially. And this was, of course, a bit of a problem from a firm perspective, because real wages rising without an economy doing that well the last couple of years, that might not necessarily be good. So I think we're in a phase in which, indeed, nominal wages can also start increasing a little bit more, but probably not as much as inflation because of the needed compensation for previous real wage increases.
And what role does the Swiss franc then play in this?
Well, that's, of course, the determining factor, or at least it has been. As the last couple of years, we've seen a very strong Swiss franc, which forced firms to cut prices, or at least not being able to increase prices. Mm-hmm. That has led to low or even negative inflation for a number of years in a row. Mm-hmm. And these phases are now gone. Okay. Yeah, so that's the very good news.
Well, and okay, now we're looking at a weaker franc, so we're almost at 120.
It's almost at 120. It doesn't seem to dare to cross the 120 at the moment. We're already approaching the 120 for a while now.
Yeah.
Yes, that's true. So it's certainly weaker than a year ago. And that's, of course, a good sign for the export-oriented industries.
Correct. And is it going to continue in that direction, do you think? Is that the trend, or...?
Exchange rates are always very difficult to forecast. I would still say the Swiss franc is a little bit overvalued, but not as much as it used to be, partly because we've seen several years in a row of negative inflation and clearly inflation rates below what other countries have had. So although the rest of the world also has low inflation, Switzerland had even lower inflation. And that, of course, makes us automatically over time slightly more competitive. Yes, and that's basically what for us economists matters, not the nominal exchange rate vis-a-vis the euro, but actually the real exchange rate. And the real exchange rate is actually even better than the nominal one. We've seen a clear depreciation already a number of years in a row.
Could we be in danger of going the other way, into deflation? Is that possible?
Well, the deflation phase is behind us. That's not the case anymore. We're in a very good economic shape. Inflation rates are now around 0.8%. At least that's what the latest figures tell us. It's probably going to stay there for a while. I don't really see the danger of having much higher inflation or the other way around, going back to this deflationary situation. Given the economic conditions, we don't have to fear that. So I think we're in a good shape.
And if we move on then to well, actually, I had a question for you, because one of the prices, consumer prices that are on the rise are energy prices, right? This is due to
Well,
oil,
that's the oil, of course.
to the oil discussion. But I mean, in the U.S., this would be a much more difficult, would be a bigger problem, right? Where they're more oil reliant. But here in Switzerland, what does that mean for us?
Well, it's oil is, of course, the most dominant part in the energy price situation, but it's not the only one. If the oil price goes up, very often other energy prices go up with it. Yes, like, for instance, the gas price. It doesn't have to be completely coupled with each other, but often there is a link. So energy in general becomes also more expensive. And, of course, we also need energy.
Right.
We're more labor intensive. We use a large amount of human capital in Switzerland relative to other countries, very much service oriented, but it doesn't mean that the industry doesn't need energy.
I'm thinking we're going into summer holiday time, when people are going to be, more on the road, they're going to be paying more for gas, and, it's just going to be more expensive holidays.
Yes, the oil price plays a role. Yes,
Yeah.
and it might also have consequences for travel cost in general, airplane tickets, for instance.
Yeah,
If the oil price stays at a higher level, then of course this will at some stage have an effect on these other prices as well.
And then you couple that with the weaker franc, and then it's almost like we should all have staycations.
Well, I think we're moving away from a situation in which inflation was zero or negative to a situation where inflation is close to 1%. I don't really fear that we will soon reach much higher levels than that. So in that particular sense, I wouldn't overstress this.
So Jerome Powell is visiting us tomorrow, in theory, in Switzerland. There's a speech and a visit planned. What do you think? What are the expectations from that meeting? What do you think could come out of there?
It's very difficult to say. It's important that people like him are actually visiting our country. That's good news, that we have these bilateral relationships being built up with these very important people. But at the moment, I wouldn't think that something very concrete comes out of that after 1 or 2 days.
You think it's going to be more a meet and greet and...
To quite some extent, of course. There will also be serious things discussed, but it doesn't imply that there will be immediately decisions being made. That's something else.
Okay. Speaking of the SNB, we have a fun feature that we're doing now with our guests here on the Living Markets, where we are inviting them to the SNB Challenge. And the question, Jan-Egbert, is, are you up for the challenge?
I'll do my best.
All right, great. So, basically, in a nutshell, what we're doing is we are asking you to take a roundabout guess as to when you think the SNB will make a rate hike in the next 12 to 18 months. I don't know, as much, we've got these many months up on the calendar, we can so certainly add. When do you think this could happen? What's your guess as the head of the KOF Institute?
Well, what we're discussing internally, and I think that's quite realistic, is indeed that we're talking about the second half of next year. So there's still quite some time to go.
All right, we're a couple quarters short here.
Yes, I see this goes until April, and I don't think that we will have by then seen an S&B hike yet.
All right, so you think, so the second half, can you give me a specific month, more or less?
Well, it's so far away. Let's say August.
Let's see.
Yes.
Oh, okay, August.
I'll just take an arbitrary...
August. So we've got August of 2019. Okay. No, nothing specific. No specific date. You think just August 2019?
That's just a rough guess.
All right. So we've got the SNB Challenge today, and Mr. Jan-Egbert Sturm of the KOF Institute says August 2019. Okay. So come next year, we'll just sort of... We'll take we're gonna gather all this information, and we're going to see more or less where it falls.
Yeah, I'm curious myself. It's, looking that far into the future is not always that easy.
We'll see. Thank you so much, Mr. Sturm, for being with us today and for being part of our SNB Challenge.